local trade seems to be under pressure so far today. While finishing the day a little lower, the JSE was supported by the mining sector as commodity prices continued to rise, with gold reaching another record high. The platinum price rose the most in more than 2 months on Tuesday, giving the rand a boost. Gary Booysen, portfolio manager at RandSwiss, joins us to talk through some of the latest market moves and developments. Gary, morning. Give us an overview of what's driving the markets today.
Yeah, so it's a little bit more quiet on the news front. So it's not really underlying corporate news. We've had a little, voluntary announcement out of Woolies, for example. But I think it's really a little bit of risk off trade. Quieter week this week, but everyone kind of, I think, focusing on interest rates, looking potentially at the war in the Middle East, as well as the escalating conflict between the Ukraine and Russia, and that really pushing up the gold price, pushing up the oil price as well. So we're seeing this kind of lift in the commodity side of the market, and that's putting a little bit of pressure on the underlying equity indices. So if I look at it, it's right across the board. Overseas, we've got Europe mixed. We've got the FTSE down about 1/3 of 1%. We do have the DAX in Germany that's up around 0.15%. But unfortunately, locally, we're down around 2/3 of 1%. Resource index is the best of a bad bunch, down only 1/3. We've got the financial index down over 1% at the moment.
So, you touched on gold and oil. Let's go back there. Gold hitting another record high and oil hardly changed. This is amidst some worry about supply. Help us make sense a little bit deeper of those moves.
Well, I suppose if we're talking supply, it's the oil story. And, oil unchanged today, but definitely higher than we've seen it in a while. So the Brent crude oil price trading just a touch under $90 a barrel. Now, that's obviously not going to be great news for motorists, but, it is a supply concern. So on one hand, we have attacks on Russian refineries from the Ukraine, the potential disruption to supply. Then we've seen, drawdowns in inventories as well. So the demand side of the picture looking fairly robust. But then, of course, a widening of the Israel-Hamas war too. So it's a really concern around the Middle East. We had an Iranian consulate hit in Damascus, hit by what looks like a missile strike. So I think a lot of concern there, and oil traders just bidding up the price slightly. That kind of escalating tension also does feed into gold markets as well. As people get a little bit more nervous, they tend to buy it. They see it as a safe haven trade. So you might see some safe haven trade on the table for the increase in gold price. But also, if you look at central bank buying of gold as well, we've seen a big shift, specifically among BRICS nations, and the Chinese now, accounting for, between private Chinese buying and Chinese central bank buying, around 2/3 of annual production is going to China. So, we're seeing definitely a demand, both for gold, and that's why we're seeing the gold price absolutely rocketing up at $2,273 an ounce at the moment.
And then what about Taiwan? It's been hit by the strongest earthquake, I believe, since 1999. Talk us through the impact so far.
Yeah, so the impact, of course, the human impact is always what you've got to look at. So far, 4 deaths. We've got, over 700 people injured. There's 77 people still trapped. And of course, working hard. It is a region that is used to dealing with earthquakes. But as you say, the largest earthquake in 25 years. Now, from an investment perspective, a 7.2 magnitude earthquake in Taiwan, immediately you've got to think of semiconductors. The Taiwan Semiconductor Manufacturing Company, TSMC, is essentially the largest contract chip maker in the world. So the impact that you'd expect to see is probably in the underlying chip maker. So if we look at Intel, for example, in aftermarket trade, that's down around 4%. TSMC itself is down around 1.27%. So the market's saying that this interruption probably will be temporary. But looking at AMD, something like NVIDIA as well, both stocks flat in the aftermarket trade. So it does look like the financial market impact of the earthquake, specifically on the semiconductor industry, is going to be more limited. But of course, we've got to think of the lives that have been lost.
Absolutely, indeed. You touched on Woolworths in the beginning. It's posted a voluntary announcement. This is relating to the acquisition of Absolute Pets and the fulfillment of suspensive conditions. What's the latest here?
Yeah, so this is essentially no news in the markets, and it's good to know that the transaction has been completed. We found out about this towards the end of October in 2023 that Woolies would be buying Absolute Pets. When I said it in the office this morning that the transaction had completed, we got a comment, oh no, it means our pet food is going to be that much more expensive. But essentially Woolies is buying Absolute Pets from Sanlam Private Equity. The transaction is now completed and will be on their books essentially as of the 1st of April. All suspensive conditions, as you said, have been met. That includes the competition tribunal. And essentially the deal has gone through. Now, it isn't a huge deal for Woolies, so we haven't seen a big reaction in Woolies' share price. It was actually below the threshold for categorization. So it's maybe interesting for people to know that, when you go to Absolute Pets, this is now owned by Woolies. But from an investment point of view, there's no major impact on the share price.
If the dogs start barking or the cats start meowing, with a posh sort of accent, we'll know what's to blame. Gary, thank you very much for talking to us this morning. We appreciate you. Gary Booysen there, Portfolio Manager at RandSwiss.